On today's episode, we are going to take a closer look at Microchip, a semiconductor company that I believe not many people talk about. But luckily, we have Billy joining us today, where he's going to explain a little bit about this company and maybe a recent book that just came out that also explains a little bit of the pros of this industry. So, good afternoon, Billy, and I'm just sending your way so you can kind of start telling us what's going on here.
Great. I think for some listeners, you've known that I've talked about Microchip a few times in the past few months. I think the stock is cheap, and I really like it. And the basically the I wouldn't say the founder, but basically the founder, CEO, and now chairman. He retired in 2021. Steve Sanghi wrote a book called Up and to the Right, which came out recently about Microchip's incredible 30-year run. Just to give you some perspective, Microchip has gone up almost 300x in 30 years since Sanghi took over. So I wanted to crack open this book and see what he had to say. And after reading it, it just further cemented that I think Microchip is a really strong buy. And the reason for this, and I'll get to some of the points here, is that it's hard to understand the qualitative aspects of a business when you're analyzing just, an annual report or the latest quarterly results. It's like, what are the people behind that and what makes it all work? And this book was very, very focused on the processes and the people and the culture that Sanghi built at Microchip, and why I think that those factors are really difficult to replicate, and it's why I think the company is poised for more success. And as we'll see on the next slide, which we're not ready for yet, it trades at a discount to some of its larger peers. So one big principle in Microchip's culture is extensive internal training, employee surveys, and internal hiring, as well as shared sacrifice and shared rewards. Just some tidbits from the book. During the 2008 financial crisis, Microchip got through that without letting go a single employee.
Wow.
Now, they did that by having all employees volunteer a 10% pay cut. And that is very difficult to do with a company that was as large as Microchip back then. But it just goes to show you how aligned the employees were in terms of shared sacrifice and shared rewards. Now, during the COVID downturn, they had acquired about 20 companies in the interim between that time. And they still had 98.7% who volunteered for a 10% pay cut when that happened as well, which is an extremely high level of employees agreeing to do that, especially since a lot of them were like in Europe, and it's much harder to get people to accept a pay cut or to let anyone go in Europe because it's more worker friendly. However, those employees were rewarded as they got some extra stock-based compensation at that time for their sacrifice. And then sure enough, after these crises passed, Microchip's stock strongly recovered. I mentioned that 300x return. And so they actually came out ahead from where they would have been. I believe for every $1,000 they sacrificed, they made like $4,000 on the back end. So
Very nice.
yeah. And on that note, most employees get 4-year restricted stock units vesting with a quarter vesting every year. And employees are eligible to use 10% of their salary to buy stock at a 15% discount every quarter. And that's a 15% discount from either the lowest price of the beginning or the end of the quarter, which is just another way of keeping all the employees aligned. Finally, on the employee front, Sanghi revealed that Microchip didn't hire a single vice president level executive from outside the company for 20 years, from between 2001 and 2021. They went from 20 to 41 VPs. 13 of those came from acquisitions, but none were, hired from outside of Microchip. Everything came from internal training and internal promotions. And that's just like a really strong sign that you have sort of a unified vision and unified culture, and everyone knows what's going on. Whereas if you think about another company, you're hiring these people from other companies. There's high turnover. They're bringing, very different maybe ideas about how to do business. It's that way is much more sort of chaotic. And this unity of purpose, I think, is really what's made Microchip a standout. Um, some other tidbits are on the next slide, and I think you can turn to the next slide now, Jose.
Discover the world of semiconductors without getting lost in the technical jargon. My new membership offers a perfect balance for investors looking to understand this exciting market. Using my electrical engineering knowledge and experience, I will release weekly exclusive videos ranging from quick 5-minute 101s to in-depth analysis, covering not just popular chip stocks, but aiming to explore every public semiconductor. Plus, join the private community of like-minded investors. Finally, I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
Okay. One of the things that stuck out to me, there was one bit about Steve Sanghi's decision to basically go from a commission sales force to a non-commission sales force. This is different than every other major semiconductor company out there at the time. And I believe even still today, the vast majority use commission sales forces. Obviously, you want to incentivize your salespeople to make sales. Therefore, most operate on commissions. But what Sanghi found out was that it's more complicated than that. When you're looking to make sales people will often offer customers a discount if they move a sale from one region to the other. Sometimes you get salespeople from different geographies competing with each other, and they actually compete on price. So they're actually driving pricing down for the whole company,
Yeah.
because they're territorial about their own numbers. Moreover, and also, sometimes salespeople don't have an appreciation of margin. They just look at top line revenue. And Microchip also made it a point to keep margins intact. And also, the non-commissioned sales force allows salespeople to work together to try to get the best outcome for the entire company, not just themselves in their own territory. And Sanghi noted that after they implemented this, it was a hugely positive difference for Microchip and its results and its margins. And yet, despite that, the vast majority of the semiconductor world today uses a commission sales force still. So this is a unique qualitative aspect you won't really get from looking at numbers. Another thing that really helps customers out is that Microchip takes great pains to not end-of-life products on customers. Now, since it's a technological company, a lot of companies, they move to the newest model and they, make the older model obsolete for customers. But sometimes the newer model has different specs, and the end customer will have to change their whole device around in order to fit the new type of microcontroller or analog chip to fit their system. So it's a huge pain in the butt for customers when companies make certain products obsolete and move on to the next technology. And to make room for that, they often end of life their previous products. But Sanghi made a point that whenever possible, they will not end of life products on customers. They will produce that product for as long as a customer wants it. Now, it's not 100% because Microchip has about 40% internal manufacturing capacity and 60% outsourced. So obviously, if the foundry that they use makes a product process obsolete, they're not going to be able to do that. But for the vast majority of products, they do not end of life them, and it's a huge saying. So that's also a huge positive and greatly appreciated by customers, and it's also led to a lot of customer wins and customer loyalty, which is why you get, which is why Microchip has been able to maintain margins. You deliver value, value that goes beyond the mere price of the chip to the customer, and you'll be able to maintain a premium, which is why Microchip's margins have done so well. All this is part of the something called the aggregate system, which are 10 principles geared towards all departments basically functioning together towards a common goal. I won't go into all the nitty gritty details of that, but that's one of the larger concepts that goes from strategic planning to employee motivation to training, et cetera, et cetera. And so, why does this translate? Why does this make microchips stock a buy, especially right now? Well, I'm looking at microchip, and then I compare it to two of its peers that are considered, blue chips, considered very safe, very large, very high quality analog and microcontroller companies, Texas Instruments and Analog Devices, which are both larger than Microchip. And Microchip trades at a 25% discount to Analog Devices and I don't know, 40% discount to
Mm-hmm.
Texas Instruments on a forward PE basis, and something similar on an EV to EBITDA basis. Um, Microchip does have a little bit of debt, whereas TI, doesn't have net debt, but still. And then if you look at the revenue growth consistency over the past year, Microchip has been outperforming those two. So, why is that? I'm not sure there's a great reason. It could be because Microchip has been on an acquisition spree from 2009 to 2019. And the last big one was 2018, Microsemi. And they've been paying down the debt from that acquisition for about 4 or 5 years now. But now that they've hit their leverage target, they're going to basically increase buybacks and dividends to shareholders. They paid out 62.5% of free cash flow as buybacks and dividends, and they're going very systematically. They're going to increase that by 5 percentage points basically every quarter. So the next quarter will be 67.5, then it'll be 72.5, and then it's going to reach 100% of free cash flow in early 2025. And I think by the time that they get there, management has basically said they're done with their acquisition strategy. That was a very deliberate strategy to get certain technologies and pieces around the core microcontroller. But with Microsemi, he basically said they're done, and now they're going to harvest that and grow organically. And I think once you're returning 100% of free cash flow to shareholders, the stock could re-rate up to where these other quote unquote best in class companies are. So I thought this was, I actually read this book. It was the first business book I've read in a while, and wanted to share it here that it might have some unique insights into Microchip, which still looks underrated by the market today. So I will turn it back over to you, Jose, if you have any follow-ups.
Yeah, thank you for this, Billy. I mean, I want to say thank you for bringing microchip. I know you've discussed it previous episodes, and I actually just recently purchased microchip because of how we've been discussing it overall, and how from just pure experience, I've kind of seen like how the growth opportunities of microcontrollers as well. So this is one that's fairly new into my portfolio. I personally didn't know too much about kind of its culture base, and that kind of even makes me more bullish of what we kind of talked about in the first in the first slide, because I think for a lot of these companies, especially in the semiconductor market, engineers are what pretty much run it. You need that strong group of a talent team. I mean, pretty sure in any companies out there, but I've seen
Mm-hmm.
it firsthand where talent is super important, and to kind of showcase that, hey, maybe we might take a pay cut, but you guys are not going to lose your job. I think that just kind of brings this form of unification, for the talent itself to continue to be like, hey, this is definitely a place I want to keep working and a place I want to keep bringing value to. And I agree with you, Billy. Compared to some of these, I personally don't own any of these other competitors, to that you mentioned here, and I can't believe that microchip, obviously, like you mentioned, it has kind of that debt rate that compared to maybe a Texas Instrument, and it also has been doing a bit of a growth through certain acquisitions. I do believe organically this company doesn't mean can continue to grow and doesn't deserve to trade at a discount. So I'm even more bullish after this episode, Billy. So thank you. Any final thoughts, Billy, before we close out this topic?
Great. Glad you bought shares, and making you more bullish was the idea behind this presentation. So, yeah, I mean, Analog Devices and Texas Instruments are great companies. Don't get me wrong.
Hmm.
They're large. They're more established, and Microchip has long been like the challenger. And it went on its very deliberate acquisition spree from I think 2008 to basically 2018, with the last one being the biggest one. So I think it was perceived that, oh, it's growing by acquisition, it's not all organic, yada, yada, yada. But it hasn't made a large acquisition since 2018, 2019, and it's continued to post really good numbers. And this book only showed me sort of the reasons behind that it's not really, a fluke. It's very deliberate, and it's about the culture that's been built up, over the course of like 30 years at the company.
Thank you, Billy. I appreciate this topic, and I'm pretty sure the viewers have. So thank you again for joining me.